Hello everyone, today I will show you how to trade options. We will start from the basics, stock to options. Let's cover it all step by step. If you find my videos helpful, please subscribe and like. Thank you, let's dive right in. First up, let's talk about PLTR's underlying stock. This is its weekly chart. Notice what happened here. A high volume doji at the top. That's a sign of major holders selling. Right at this spot, high volume doji at the highs, smart money is exiting. If that's the case, what should we do? Go short. So at this level, after a big green candle, we see a doji next. This is a good place to go short. There are two ways to go short. First, you can short the stock itself. Second, you can use options to go short. We're talking about a put option. Let's introduce the PLTR put option. Here's how to set up a put option for PLTR. It's called a put option. Let's break down the key elements for PLTR's put option. What are the main factors for this put option? Let me explain. I will use a real example from the chart. Let's look at it together. First is the underlying asset. That's what we need to identify. So first, the underlying asset. What is it? It's a ticker symbol. In this case, PLTR, that's the stock name. Second is direction. For this trade, we're going bearish. So we use a put option here. The trade direction is put. That's the main idea. That's the second key factor. First is the underlying, second is directions. Third factor, expiration date. What expiration should we choose? June 6, 2025, which is this Friday. That's the end of this week. The fourth element is the strike price. That means the strike price is the price you select. This is a strike. ST stands for strike. That's a strike. That's what strike means. Which strike do we pick? We expect the stock to drop to 125, so we choose a strike price of 125. Right at this level, strike 125, and now the fifth element is the entry price. What's the entry price? That's the bid price for this option. The bid price at this level, what's the current bid price? 1.04, about $1. That's right, about $1. That's a complete setup. These are the 5 main elements of an option trade. So how do we actually place this trade? Let me show you how to do it step by step. Here's a quick demo. If you understand, great. If not, don't try this with real money. Practice on a simulator if you're new, or just watch for now. You could also test with $200 also, or use a small amount like $1 to $200 to try it out, just as learning experience. Now let's highlight the key elements. The underlying asset PLTR, symbol PLTR right here, that's the ticker. Here's the asset. Next, look at this. Check the expiration date. Expiration is here, June 6th, marked right here, June 6th. What's the direction? Put. This is a put option. We're taking a bearish position, so the trade here is a put option. Again, direction is put. Let's check the next element. Which strike price did we choose? Here's the strike price right here. Strike 125. $125 strike price. What about the bid price? That's your entry price. Entry price here. Current bid is 1.04. We expect this price could rise by the end of the week. It may reach $3 to $4, somewhere in that range. So it could go from $3 to $4. That's about a 300 to 400% potential return. That's the real power of options. If you just shorted PLTR stock, your profit would be only about 10% also, maybe 5 to 8%. But with options, you could see 300 to 400% gains. And all this in just 1 week. That's why options can be powerful. They come with a key feature, high risk, high reward. Keep that in mind. Risk and return always go together. They're two sides of the same coin. High risk, high return. High return means high risk. So be careful, please be aware of this. Let me stress it again. Options are new for many viewers. Most people are unfamiliar with them, so take your time to learn. So what's most important with options? First, the underlying asset. That's factor 1. Here is PLTR. Second is direction. We're taking a put option, so direction is bearish, put option. Third, the expiration date. We picked June 6th. So expiration is June 6th. Fourth, the strike price. The strike here is $125. Fifth is entry price. Entry price 1.04. These are the 5 key factors of this options trade. A complete option setup has these 5 elements. If you want to add a 6th, it's expected return. That's your target profit. As mentioned, we expected the price to reach $3 to $4. That's a projected return of 300 to 400%. Just understand these elements well and you're good. Let's look at another example. A few more examples will help. Let's use Tesla as our example. Looking at Tesla here, we think it might first rebound to 350, then drop to 300. So after the bounce, we expect it to fall back to $300. Within a month, we expect Tesla to drop to $300. How do we trade this with options? It's simple. First, the underlying Tesla. So element 1 is Tesla. The stock is Tesla. Second, the direction, we choose a put. So put option for direction. Third, expiration. We expect this to happen in a month. So set the expiration to June 27th. Expiration June 27th. Next, we expect it to fall to 300. So the strike price is 300. Strike price 300. That's where we expect it to reach. Now, what's the current entry price? It's just 30 cents, only 30 cents per contract. Very cheap. It might rise to $3 by the end of the month. That's 10 times return. Totally possible. Now, let's list out the key elements, summing up all the details for clarity. This helps reinforce the concept. Using Tesla as the example, this is our second case study for today. First, underlying asset, element 1, Tesla. Element 2, direction. Put option. Element 3, expiration date. We expect it to fall within a month. Expiration June 27th. June 27th. June 27th. Fourth, strike price. Set at $300. That's a strike price. Strike 300. Set at 300. Fifth, let's check the entry price. Bid price is 30 cents. 30 cents. Expected return. By month end, it could reach $3. So by the end of the month, it could hit $3. That's about 10 times return. Let's just wait and see. Just observe for now. Especially if you're new to this, don't rush into trades. Take your time, no need to hurry. Don't chase profits blindly. Go slow, learn the process first. Options trading, when options were invented, they were not meant for speculation. I'll explain more in the next video. If you haven't subscribed yet, please subscribe to my channel. If you found this content helpful, give me a like. As for the Tesla option, it will take until month end to see the results. It will be clear by the end of June, so we will need to wait. But for PLTR, we should know the outcome this week. You can track it for yourself. Results will be out this week. By June 6th, we will know for sure. The option could go from $1 to $3 to $4, so pay attention to this potential move. Today's strategy is bearish. You should short PLTR right at open, so you can act at market open. Short PLTR now. Alright, that's all for today's session. Thank you for watching.